Live.
Now, ladies and gentlemen, welcome once again to now episode 37 of our weekly Vesto show. It's a true pleasure to be with all of you again this week. I still have to excuse myself for being absent last week, but hey, blame my dentist and the root canal and the jaw and all that kind of stuff. Didn't feel like doing the show. So looking back to last week, even more excited tonight to be here again, once again, of course, with my good friend and colleague Wolfgang Decker, as you all know by now, at the southern end of town, whereas little Carsten is at the little less posh northern end of Munich. And hey, once again, we are excited to have amazing guests tonight, amazing guests from some of the true, what can I say, innovators, wizards, within the DeFi sector. We're happy to have Jonny, Rhea, and Windra, Thio here from Elements Finance. Gentlemen, thanks so much for being with us tonight.
Yeah, thanks for having us.
Yes.
Ellen, you guys are doing really, really great, really, really interesting stuff. Nevertheless, before we go into what Element is doing and what your fixed rate protocols are all about and what that means for savers and investors, and at the end of the day, where this yield, comes from in DeFi markets, which I think is still a big black hole for a lot of people, probably leading to the statement which I heard a couple of days ago when we were discussing about DeFi. Someone said, all that DeFi stuff, what's all that black magic all about? I don't get that. How does that function? So maybe Windra, Jonny, Wolfgang, to the three of you, and you can probably all pitch in. DeFi, really black magic, or maybe way more serious than people are thinking?
Yeah, so I can give kind of like a background on where some of the yields come from. I would say it's really up to the individual to decide, like, it's black magic. I think some, there's a high kind of like, there's definitely a lot of like legitimate projects in the space where there's nice organic yields, and that's sort of like what Element tries to focus on, kind of like capturing those yields. And like, so in general, I would say like, basically like the source of where the yields come from is like you have these decentralized exchanges, like Curve, like Uniswap, and what people can do is they can decide to like provide liquidity on these decentralized exchanges, and by providing liquidity they will actually like earn trading fees. And in addition to like earning trading fees, when they provide liquidity, they're basically given these like liquidity providing tokens, these LP tokens, and then they can take these tokens and basically stake them. And by staking them, this actually provides value. And by providing liquidity, you're providing value to Curve, to Uniswap, to Balancer, to these decentralized exchanges. And so what they'll do is they'll reward these liquidity providers with governance tokens, and these governance tokens like have inherent value because they allow you as a user of the platform, to vote on the direction of the platform, to have some sort of ownership in the direction of the development. And so they inherently have value. And so you can hold those tokens, you can sell them, so that those tokens in combination with the fees earned is one of the primary sources of yield in DeFi. And then
Jonny, let me take a step back, maybe.
Sure.
Here's Jonny Durbanboy, Chief Marketing Officer of the company of Vesto. To put that into really simple terms, you have the crypto exchanges, and they have crypto floating back and forth, and the point is, that either have to sort of mine the tokens all the time they need them, or they just need, or they use crypto that is available in the system, so to say. And so by providing those exchanges with crypto to use it, within split seconds without having to mine it new, this is what you get rewarded for at the end of the day.
Yeah, that's correct. So basically, if you want to, so then as a user, like there's always liquidity on these platforms
Exactly.
to basically like, you know, to, you know, allow people to swap between, you know, different token pairs for whatever, you know, their needs are. And so that's rewarded, you know, like that's rewarded by these decentralized exchanges. And there's, and
which
there's,
which which Jonny, at the end of the day, is nothing else but what a classic fiat-based bank has been doing for centuries. You know,
yeah, I
they've
mean,
taken the
everything
money
that's
of,
old is new again, right?
yeah,
Like, yeah, totally.
they've taken the
Um,
money off the people who put it into their savings accounts or checking accounts and gave it out, you know, to for loans or for mortgages or something like that, and you got rewarded by it, called interest.
That's correct. Yeah, and that actually brings up another source of yield, which is basically like you can loan out you know, like a token
Mm-hmm.
on like a compound finance or Aave, and then you will be rewarded, you know, with some sort of like fee, you know, like that's paid by the person who's actually borrowing. In addition, like platforms like Compound will also reward the user. So being like a lend, you know, basically making these tokens available so that people can borrow against them, like Compound will reward you with their governance tokens. So that's another source of yield as well. And then you have these yield aggregating platforms
Mm-hmm.
that basically are really good, because obviously if you as you shift liquidity around, you know, different platforms, it's going to saturate yield somewhat.
Mm-hmm.
And
Mm-hmm.
and there's always new, you know, yield sources popping up. And so that's where like yield aggregators like Yearn or Yearn or whatever you
Mm-hmm.
want to call it come in, and they are experts at basically like pooling liquidity, you know,
Mm-hmm.
and
Mm-hmm.
basically putting that money to work in the right place.
Mm-hmm.
And then we at Element sort of wrap these yield aggregation sources, and that's where our yield kind of comes from behind the
So
scenes.
so it's interesting to hear your remarks, Jonny, because I mean, at the end of the day, you know, I think listening to you takes away all the black magic trash talk. You know, at the end of the day, you know, the yield that is being that is developing within a DeFi market is nothing else but, you know, in the classic fiat market, someone providing liquidity to others who need the liquidity at the point of time when the one giving the liquidity doesn't need the liquidity at the given point of time, and thereby getting rewarded with what we call interest rates or yields.
Yeah, yeah, that's exactly right. It's interesting because like there's you know, there's always like you know, like the question is like, are these yields sustainable?
Yeah.
And you know, and I think one thing you know, that people forget about is like there's a lot of value in also securing the protocol. You mentioned
Mm-hmm.
like mining tokens or whatever. Well, if you think about like the Ethereum roadmap, they're switching to like a new consensus algorithm, you know, which is
Mm-hmm.
called proof of stake. And
Mm-hmm.
there's value in securing the network, you know, like the people who actually secure the network to ensure like these transactions, you know, go through and are safe, and secure this, you know, this distributed ledger. Um, they're rewarded for doing that. What's interesting is we can also like wrap that. And if you
Mm-hmm.
believe that there's value and there's a future in blockchain and Ethereum technology, then you have to believe there's like, you know, there's actual like inherent value in keeping that protocol secure. So I think that's a
Mm-hmm.
very nice organic like source of yield as well. And that's
Mm-hmm.
another source of yield that we go after as well. So
Which is yet again, Jonny, you know, on the one hand, for those who understand how the system works, you say, hey, wonderful source of yield, you know, very secure way of transaction and everything, very much transparent to the ones who are within the system. However, that is again, you know, something that you know, creates this black magic impression to somebody, you know, who's not inside the DeFi world, because they hear something about yields up to 50% or something like that, and there's not a bank at the corner or so where you can actually find employees and look into their eyes or everything. You know, this is all happening for digital players and we're talking numbers which sound, too good to be true, in a fiat world, which probably makes, some of the people nervous for actually no reason.
I mean, I think that makes sense, but I think that's a good reason. I mean, that's why it's nice y'all do these kind of fireside chats, because like, I mean, there are a lot of groups that are like anonymous. There's not like a public face. And we think it's important, to like, to show up, to talk about it, to kind of
Right.
Like pull
So
back
do we.
the curtain so people can understand, like I get that, like there's plenty of areas I don't understand. When I first hear it, like it sounds like nonsense to me. I mean,
Right.
frankly, like some of it is, you know what I mean? But like I think it's our job as like communicators and and leaders in the space to just kind of like help kind of basically like remove some of the myths and point, like
Right.
Element does a good job, and yield aggregating sources like Yearn do a good job of pointing users to where the nice organic yields are.
Right.
So
Jonny, Windra, that's a good tagline there. Element's doing a good job. I think we've taken a couple of minutes right now to take away the shadow of black wizardry or something like that from DeFi and yield generation. Check. I hope we've been successful on doing that. This is episode 37, so people have been listening to Wolfgang and me probably more than they ever wanted in their life. Having us explain what Vesto exactly is doing in providing the infrastructure for what we call future world of finance, or even other use cases beyond finance. Maybe we can take one step back and say, okay, Element Finance, what exactly is it that you guys are doing, and who are your target groups of customers? Who are you dealing with?
yeah, so at a high level, I can give like the real quick explanation and kind of let Windra maybe provide a little bit more color to it. But basically, what we do is we take the yield like we just kind of went into detail about, like a Yearn vault, and we wrap this Yearn vault and we create two tokens, like a principal token and a yield token. And the principal token is going to be redeemable, at the end of a fixed term for the original amount it's deposited. And the yield token is going to be redeemable for whatever yield has been earned. And so really what this does is splitting the principal and the yield opens up like some interesting possibilities. Like principal tokens can be sold at a discount, basically to free up capital and reinvest and increase exposure to variable yields. So buyers of the principals also get a good deal because they get a simple way to lock up fixed rates, and that kind of like exposes the two sides of the market. You have the people who are more casual users that maybe want to lock in the fixed rates, and then you have the more speculative users, ones that are more interested in maybe going long, and leveraging on the variable yield. So that, I'd say in a nutshell, is the magic behind Element, what we do.
Windra, Jonny already, laid out the red carpet for you, having you add on that.
Yeah, I mean, I think to answer your question on who our targeted users are, I think it's more so users that are a little bit more risk averse. Variable interest rates, especially in DeFi, I think you mentioned that it goes upwards of like 50% or even higher.
Right.
Sometimes, users, they get a little bit skeptical about those yields, as you said, because they're not really accustomed to seeing those rates. So we want to provide some
plus Windra, if I may jump in, they still know the old logic which they told us in business school. Oh, higher yield means higher risk. So the question is, do I put my funds at risk by investing into DeFi, and does this 50% interest rate, DeFi yield signal any kind of risk or so?
Yeah, no, and that's exactly correct. We want to offer an attractive, fixed rate of return for our users who, don't want to take on that risk. They don't, maybe they have a full-time job, and, this is something that they kind of just want to save for retirement on. At the same time, we talk to institutions, maybe hedge funds, people who have more of a longer term thesis on some of these assets that we feature, like Ethereum and Bitcoin. If you're going to be holding Bitcoin or Ethereum for the next 2 to 3 years, why not hold it at a fixed rate position, right? You know that it's going to be Bitcoin.
Right.
It's going to be accruing, a 5% interest on that position for the next 2 to 3 years. So, in terms of our user base and the target audience, it's primarily those individuals and entities. But it's starting to definitely grow. Our user base has expanded to beyond just those type of users. We've now been, in communication with companies. Companies invest out of their balance sheet to do treasury allocation. Even DAOs and other protocols. They raise a lot of money. You said, the market it's easy to fundraise, it's easy to raise a lot of money. They want to do proper treasury management, and so they come to us because they don't want to lose it all. In the event that variable interest goes from 20% to zero, they want to lock in a fixed rate and know that they have that incoming revenue stream on the money that they've raised. So I think initially, or especially at this moment, I think those are probably our targeted user bases and who's been kind of utilizing the protocol.
So Windra, first of all, thanks a lot. I mean, let me continue my game a little bit of tonight, of trying to sort of draw parallels between the classic traditional banking sector and DeFi. So what we can observe is the way you describe it, in the beginning, you had the savings bank customers, who had their savings accounts, put their money in, let it sit there, let it grow year by year, very little risk involved. Fine, and now you have the portfolio investors, so to say, the corporate portfolio investors. Plus, you also have those who are really using, the market to raise money at this point of time, because, as we've just seen in a couple of cases, my prime example from this week is a player that provides a fantasy football solution, based on NFTs, just realized a $4.3 billion funding from SoftBank. I mean, on the one hand, it's SoftBank, so that maybe says a lot as well. But no, I mean, there's serious money in the market, and Jonny, we were talking before the show, it's a little bit like sometimes what we see, what we've seen in the early 2000s, when you just had to slap a .com to your iced tea company, and you were raising billions, which is why it's so important, yet again, like the two of you were saying, to come out to explain the business models, like you explained Element Finance's business model, we explained Vesto's business model, to sort of take a little bit of the mist and the dark shadows out of the market. Wolfgang, you've had way too much of a relaxing night so far, because Windra and Jonny were telling us such great insights about the DeFi market and yield generation and what Element's doing. Obviously, the question some of the people in the audience might be asking right now is, well, great, we learned something, in terms of educational webinars on DeFi and yield generation. But I mean, wait a second, doesn't Vesto always invite people and companies and players who they collaborate with, where there's somewhat of a touching point? So we've learned what Element Finance is doing. People know what we at Vesto are doing. Can you maybe bring the two together for our audience and explain a bit where the touching points between Element Finance and Vesto are?
Yeah, let me try. Maybe
tomorrow he's going to tell me again, this was the nasty question of the night. I know it,
I have one nasty question for you tonight.
Okay, there we go.
This show tonight will be different. You will be asked a nasty question.
Oh my God.
Let me give it a try. I mean, the crypto world, the DeFi world is still, let's say, I don't want to call it in its infancy, but it's still early. I mean, our friend Oscar, our managing director for Latin America, he found an interesting article in The Economist recently that compared the second quarter of Ethereum, the transaction volume, with the second quarter of revenues that Visa made in the same period. And both parties, the Ethereum community, so to say, and Visa had approximately 2.5 trillion. Okay. So Ethereum is 6 years old. Visa is 60 years old, if I'm not mistaken.
Yeah.
I think the first significant use of DeFi was maybe in the 2019, if I'm not mistaken, by MakerDAO. So it's 2 years old, and we have at the moment 90 billion locked, roundabout, maybe a bit more, maybe a bit less. So I think it's still early, and that market is growing. Having this said, this market requires loads of specialist knowledge in all different areas, from a security perspective to protect deposits, and we have our cold storage partner, CoinCover. We have Lloyd's of London as an insurance partner with us. So I think that the market is really complicated, and it would be foolish for somebody such as Vesto to believe that they know it all and try to build everything from scratch. So if there is best of breed out there, such as Element, it's wise to invest with these guys. So we partner with Polygon because we believe they have a very unique and very effective proposition in the market. And I think it would be really wrong to try to do this ourselves, to have everything in-house. We need to focus on our core value proposition and then integrate with the best of breed. Luckily, we found Element as being definitely best of breed in the space. Not sure if this answers the question, but this is my perspective on why do we bring all these partners in here.
Would you agree, Jonny, Windra? You know, is that also what makes Vesto interesting as a partner for you guys?
Yeah, like crypto is, you know, like you said, like DeFi is definitely in its infancy. It's even, trying to like sort through the different yield sources and determining like what's, you know, like a good place to put your money. That's one problem, right? But there's also like a user experience problem. It's complicated, right? Like, you know, holding like, you know, like having a, you know, basically like, you know, at the core, really what Element's trying to do is basically just abstract some of that stuff away, you know, and create this fixed rate instrument. And so we're really a protocol at the end of the day. We try to be as simple as possible to integrate. And that's why we've enjoyed working with Vesto, is like y'all basically pick up where we leave off. So I think, you know, like native DeFi people are, you know, are fairly comfortable, you know, with going to our DApp, you know, and navigating through that. But like, that's not going to be comfortable for like banks necessarily, or like institutions. I think that's where y'all pick up, and y'all.
Or maybe even not for the stable fixed income seeker Windra was characterizing, huh? Yeah,
I would say there's like the stable fixed. There you'd be surprised. There are people that are in DeFi are comfortable with, you know, with Element, that, you know, they're fine going to a DApp and, you know, and locking in some fixed rates, but like that's just a fraction, you know what I mean, of what the market really is. I think the you know, the connections y'all have and in y'all's actual like, you know, the people that interact with and want to use Vesto basically like bridges the rest of that gap too. So at the end of the day, we're a protocol. We try to make it as easy as possible to integrate, and y'all build creative things on top of that. And I think it's a good partnership from that point of view.
Yeah, I mean, obviously we're excited, you know, to be partnering up with you guys, and obviously, you know, I think they became clear for our audience as well. You know, we both see it from the same end, you know, as being very complementary. You know, when you say we pick up where you end, pick up where you guys end, same way around, you know, for us, obviously, but. You already mentioned
the spirit of DeFi too, really is
right.
Like, we build on each other, right? And so I think that's sort of what's refreshing about this space. You hear comments about like shadowy supercoders, like this is all done in like dark rooms, you know what I mean, where you can't, but that's bullshit.
That's not true, you know, as we proved tonight. Yeah, like
there's nothing you can't see. It's on a public ledger. There's nothing secretive about this. You know, it's in fact quite the opposite, you know, and a lot of these protocols and people that have never even you know, find a way to work together and build off each other, and that's what I really like about this space.
And I think here we really have And I think here we really have a clear difference to the classic banking world, because if we sort of were a Vesto bank, and wanted to move into different fields of business, how would banks have done it in the past? They would have hired 200 more people in an extra building and all that sort of stuff. And we say, hey, we bring the right partners together and create the best, most efficient, and most user-friendly solution for the different kinds of customers out there. Wolfgang, sorry, I interrupted you.
No, I think that's a very good element, that we partner, that we collaborate, that it's an open, inviting community. And your banking example is also absolutely right. When I started my career as a consultant in the 90s, pretty much all of the banks had an in-house developed core banking system. But there is no value you generate when you have the better account management application, or the better ledger, or maybe the better risk management or portfolio simulation tool set. But the core banking system itself, it's really hard to be differentiated if you want to build this on your own.
That's a little bit like if BMW was growing their own cattle to have the best leather for their leather seats, eh?
Kind of, yeah. And I think that's exactly the point. So make or buy is a very important question in this world. And yeah, I mean, we are happy to be partnering with many of the leading parties in the market, and we're happy that they also like to partner with us the other way around.
Which is, going back to what Dave Appleton was saying a couple of weeks ago when we had him here on the show, one of the gods of wallet creation, so to say, and he said, hey, what's important is you create infrastructures and visibly, Jonny, as you were saying, not in some dark back rooms, but visibly you're bringing the best players of the market together who have a track record of success, who know what they're doing. And, this is what creates the credibility and the trust in the market as well, which is obviously the way we want to be going together. Way we want to be going together. Yeah, Wolfgang, take a deep breath.
Yeah, I mean, at the end, it's still, even so 90 billion sounds impressive, it's still a long way to go.
Yeah.
And it's still a small community. And for the time being, of course, the community is also somewhat competitive, because every startup, every player wants to create a position, but it's not hostile competitive. So it's maybe also a very important differentiator to many other markets I have seen. So it's positive, encouraging, in a positive spirit, competitive, but not in a negative sense.
$90 billion market, Wolfgang. You gave me a good keyword. Still small market, still a market that is in its infancy. I think we all agree on, DeFi still being, taking the first baby steps, so to say. Where's it going to go? What's the horizon? What's going to come next? I mean, the industry is dynamic. The technology is dynamic. Jesus, I've mentioned, fantasy football, based on NFTs being funded with $4.3 billion, in our DeFi area and the high yield area. We're talking about yield games, where's that going to go? Is that going to go into a direction that is interesting for at least some kind of stability seeking customers? Is that going to be a wild west of crazy applications which nobody can understand anymore, and maybe our children will be paying for? Or where's it going to go?
Yeah,
let me return that question, Carsten. Do you believe that the DeFi market globally, the DeFi market is global, it's with no access boundaries, it's inclusive, it's 24/7, and so on. Do you believe that there is potential for the DeFi market to be bigger than the trading volume on NASDAQ?
Oh, absolutely. I easily believe so. It will. Why? Let's go 120 years back, or 110 years back, when the first automobiles came into the world. At that time, people were saying, how many automobiles are we going to be needing in the world? Funnily enough, they never asked how many horse carriages or how many horses do we need. What happened afterwards is, I would assume nowadays we have way more cars out there than we have horses in the world. So I believe what we observe is right now we're at a tipping point of a completely new structure of financial markets, from intermediary based to decentralized. And people were afraid of cars in the early days as well, because they didn't know it. People are always afraid of what they don't know. But the more people get used to it, and the more people see how trustworthy people like us four gentlemen really are. I mean, look into our eyes. The more they will trust into that technology. And I think at that point of time, DeFi is not only going to be outgrowing NASDAQ, DeFi is going to be outgrowing the New York Stock Exchange. And why is DeFi not going to be outgrowing classic fiat transactions? Is that going to happen within the next 5 years? No, probably not. But in the long run, I could see that happen. Yeah.
I mean, I mentioned the two figures that Oscar found in the Economist article, that the Ethereum transaction volume was 2.5 trillion in a quarter, and Visa revenue or transaction volume was also 2.5 trillion. That is 1/6 of the NASDAQ volume in the same period. So give it a year, or give it maybe 3 years, and the Ethereum volume will be on par with NASDAQ because of 24/7 inclusive global blah blah blah. And then
I mean, to add to that, when I was a graduate student, when I was doing my MBA at the American University in Washington D.C., I was actually working for NASDAQ, which was in the late 90s. And I remember how everybody from the traditional stock market was looking at us and said, is that going to be the way the stock market's going to be taken in the future? We don't think so. We need our, trading floor and everything. And nowadays, most of the stock exchanges in the world function exactly the way in what NASDAQ's functioning. And, this is evolution. This is the way it goes. But now you had your fun. Now you returned the question to me. Guys, I didn't forget my question. Where's DeFi going to go? What's going to happen? Especially with regard to yield products, what's going to be happening to yield games and all that? And are we opening, Pandora's box, or is that just a really, really, really cool source of yield and money access and liquidity and everything?
I think that DeFi is going to be probably going to take over, just regular traditional finance in the next 3 to 5 years. I think the problem right now is the reason that it looks too good to be true, the yields especially, is because we've begun to normalize extremely low yields, like 0.001% savings account is normal to us because we've seen that all our lives. But if you put your money into that savings account and then you try to get a personal loan from that same bank, they're charging you 7%. But you kind of ask yourself, I mean, you even, I think, highlighted this earlier. You're the one, they're using your money to loan out to those people that are taking the loan.
Exactly.
But
and paying their nice buildings and bonuses and incomes and all that,
Correct. Yeah. And, what's amazing about DeFi is that all those middlemen are abstracted away from all of this.
Right.
It's just the borrower and the lender, so the big question of, are these yields sustainable? I think they're going to be always going to be relatively higher than traditional finance, because there isn't a middleman over here taking a cut and one over there taking a cut. And, eventually there are going to be structured products built on top of DeFi yields. But the moment that it becomes like all of the different yields are, taken away from different various middlemans, because these yields are on chain and you can track where they come from, it gives any user or any product creator the ability to start over, to build a new product that removes away all the fees. So it's a much more competitive market, which ultimately benefits the user, right? Because when these product creators are competing against each other. They're always trying to get, the most users. So that's where I think DeFi is going to be headed. I think eventually it's going to be just called finance. So that's my opinion.
Yeah.
Jonny.
I think it's also important to like allow the space to continue to experiment to some degree. That's where this came from, right? And so that basically the freedom to experiment. You have control of your money. You have programmatic access to your money. Removing the middleman helps, but like experiment. Like I watch my daughter play Roblox, which is just like super popular like platform, and she collects like like pets on Adopt Me, right? And they're like basically NFTs, or you think about games people play, right? You buy land, you can own land. Well, that land can be NFTs, right? That actually, like, as players interact on that plot of land or that city or that block or that store you own, that actually generates revenue, right? And so there's some really interesting developments in that play to earn space. That's what it is basically taking like traditional gaming and then basically allowing you to generate yield, from players' interactions with it. And so that's an interesting space to explore for yield generation. So what I would just really hope for is that, that we're allowed to continue to experiment, and continue to incorporate these new kinds of yields. There's also like, so right now, a lot of DeFi yields are like are kind of like propped up by, by like token rewards from, like distributed decentralized exchange like Curve Finance. But in the future, I would say like securing bridges between chains and like the actual core protocol is a very organic source of yield that can actually like maintain like high yields with a lot of capital inflow. So I think encapsulating that and bringing that into DeFi is a very important step as well. So just kind of I hope it stays open and we can continue to experiment. I think it's, and part of that is building the trust, is working, having conversations in the open. I think regulators have questions, that's fine too. You know what I mean? And so Element, as we chose to operate, in the light, you know what I mean? Like we want to do
absolutely,
that. We want to build that trust, and so I think that's very important for the development of the industry.
Being trusted players to let regulators give us the freedom to continue to experiment, to develop the industry and to develop the technology at the end of the day to the benefit of the market players and of the people using those infrastructures. Jonny, probably wonderful closing remark of yours, because what you don't know is I already feel the cold breath of Travis in my neck, as always. And
one more, Carsten. One more.
One more
question. Dirty
one
question.
more question. I promised you the nasty question is on.
Oh yeah, I'm sorry. I tried to get by with a somewhat smart-ass summary, but no, shoot.
Unless you have any other question to the audience.
No, go for it.
So the nasty question today is actually an idea that Lou Kerner presented kind of. In his LinkedIn profile, he spoke about the moment he was seeing the crypto light. And last week on the show, I asked him about this moment and he explained it. So this week, I want to ask you, what was your moment when you saw the crypto light?
The aha moment, right?
Yes.
The aha moment, believe it or not, was getting together with all of you. Why? That was my crypto aha moment. Because before that, I knew crypto as the way most people out there knew it. They knew something about Bitcoin and everything and crazy fluctuations. And yes, you can win a lot of money, you can lose a lot of money. And, my comment about that always was, hey, guys, if you want to go into Bitcoin, rather go into casino because the red wine is better there. So that was always my comment on that. And then when it was all of us, the Vesto sort of early guys getting together and coming up with this vision of a stable coin based financial system that is secure, that is efficient, that is inclusive. We've talked about the 2.6 billion people in the world so often who are unbanked or underbanked. This is when I said, wait a second, this is great, because this helps cure a lot of inefficiencies, inequalities, and a lot of deficits in our current financial system. And Wolfgang, as you know, for more than 10 years, I've been in consulting for banking and banks and moving them through digitization. Now I saw a way that, actually here is one technology which, again, if you bring the right people together, if you create a trustworthy regulatory environment, has the power to create this future world of finance we're always talking about. And that future world of finance, it is great, because for the first time in mankind's existence, it will allow everybody in the world
There you go.
an access to financial systems. And I think that's wonderful.
Cool. Thank you, Carsten.
Carsten, I
Now
can't.
the full press of Travis.
Well, Lou said last week.
Travis, yeah, your final blessing.
Well, Lou said last week that companies like Vesto and Element have the chance to become worth $1 trillion in valuation over the next 5 to 10 years. And I believe it. And distributing the wealth around the world is so important. Everyone can be solid from a financial perspective if we do play our cards right. Hey, guys, thanks a lot. Signing up now.
Thank you.
Take care, everyone.
Thank you
very
It
much.
was
Bye now.
wonderful. Thanks so much, guys. It was great. Enjoyed it.